Hi guys, Zaheer Anwari here on behalf of the dynamictrader.com. Can I get a quick hello from everyone that you can hear me and you can see my screen okay? Administrator, hi Adinda, brilliant. Can you hear me okay? I've actually got a new headset here, so I'm just double checking that it's coming through clear. It should actually be much better than previously. Hi FX Praise, thank you. Okay, brilliant. So we have sound and we can see my screen as well. Brilliant. Okay, fantastic. High numbers. Okay, beautiful. Okay, guys, I can see a few names on here. Thank you all really very much for the interactions, the hellos already. One thing that I really enjoy when doing these webinars is interacting with people that are tuning in. So if you do have any questions regarding the analysis that you're going to see today, then please post them in the chat box and I'll definitely cover them. A bit of a background about myself. My name is Zaheer Anwari. I am a long-term trend trader. So what you're going to see today is analysis using the larger time frames, monthly, weekly, and daily time frame. I'm not a day trader, I'm not a scalper, I'm not a swing trader, I'm a trend trader. So what I'm looking for are long-term moves in the market, moves that can last potentially for months. On average, I would say that I hold positions maybe for 8, 9, 10 months. I've held positions for 12, 13 months as well. So I'm looking for those big moves in the market. And there's a lot of advantages that come with this. First of all, so if you are looking on lower time frames such as 1 hour or 15 minutes, even a 4 hour, you're glued to the screen. So if you are working a 9 to 5, you're kind of constantly looking at your app or your monitor to see what's happening in the market, and it can become quite stressful. By looking at the larger time frames, you don't get caught up in all of that intraday noise, and it allows for trading to then be adapted around whatever lifestyle you have, whether you have a 9 to 5 job, you run your own business, whether you're a stay-at-home parent running an online marketing business of sorts and you want to take on trading as well. There's various ways that trend trading can be adapted around your lifestyle. So there's a lot of advantages. In addition to that, I take few trades. Day traders are constantly taking large numbers of trades during the day. With trend trading, you only need to take a few trades a year and you then compound into the trend. So it's a far simpler approach, and it requires a lot less work, and generally the profits are larger and more consistent than shorter time frame trading. So that's really an insight into what you are going to see today. Okay, so we're going to go to the software that I'm using, so bear with me a second. I'm just going to share my screen. Okay. Oh, actually, before I share my screen, guys, I just wanted to direct you to the FX apprenticeship. So if you guys are interested in what you see today and you want to take your trading to the next level, remember, this is a business. You need software, you need training. There's all those other elements that come into trading. If you do want to take that to the next stage, then I'm doing live training on Saturday. It's online, and it is all from a long-term trend trading perspective. So trend trading is something that's very little understood. People are not really aware of it. The course is £99, but it's for a whole month of training. So that includes weekly webinars, community support, stocks analysis, a video portal. There's a lot of information that goes into that. So if you are interested in what you see today, then please contact me and I will email you across the details. Okay, so let's go into the actual software that I'm going to use. So can you see my screen there, guys, please? Can you see the eSignal platform, administrator? Yes, fantastic. Thank you. Okay, so what you're looking at is a very sort of typical screen setup of mine. So on the left hand side you have the watch list. Now notice it's an extensive watch list. So you've got the Aussie dollar, US dollar at the top, and it goes all the way down to the South African rand, Japanese yen at the bottom. You have the monthly chart with the major levels of support and resistance highlighted by this proprietary tool, and it's simply highlighting major pivot levels, and you can see how price actually reverses at these major pivot levels. So very significant areas of support and resistance. A lot of the times people put their support and resistance on lower time frames, so maybe a 1 hour or a 4 hour, 15 minute. The lower down you go, the more candles you have to deal with. The more candles what are the questions that need to be answered? By moving your support and resistance onto the monthly time frame, you get a very clear picture of where the support and resistance levels are. In addition, you have these pink lines. Now, the pink lines tell me what kind of market conditions we're in. What the pink lines represent is the high of last year, 2015, the low of last year, and the closing price. These pink lines are very significant. If price is trading within these pink lines, it's generally a consolidation. What I want is a bias in price action. So if price is trading above the high of last year, I'll have a bullish bias. If price is trading below the low of last year, I have a bearish bias. If it's trading with the pink lines, you can see right here, it's very much an area of consolidation. Price is just going sideways. And this is not a market that I'm interested in. Okay, you may have range traders coming in and going short of resistance and long of support, but the moves, if you look at the trend, if you look at the move from here, from this point down to here, that is a trend. Look at the range. Trades would be very short-lived. Whereas if you get in at some point in the trend and you hold it for the whole duration of the trend, you can then see how profit is made. The idea of trend trading is not new. This is an idea that's been around for decades. It's been around before the internet. It's just very little understood. And because of the creation of the internet and so much information out there being on shorter term trading and day trading, that people naturally go down that route, very unaware of what trend trading can deliver. Okay, so move your support and resistance onto the monthly time frame. The weekly and the daily time frame, I've just drawn two very useful moving averages that you should be using: the 200 moving average and the 50 moving average. So I have the 200 moving average on both the weekly and the daily, that's the black line, and I have the 50 moving average, which is the blue line. And these are significant levels of support and resistance. The 200 moving average gives me the overall bias of the market. So if I'm below the 200, I want to go short. And if I'm above the 200s, I want to go long. I don't go against that bias. And this is where the element of patience comes in. And it's patience that really tests traders, because patience is very little understood, in the sense that how do you apply patience? And then in addition to that, there's always that need for instant gratification, that if you're in the market, you want to get in and get out with profit, and the market owes you that. The market doesn't owe you anything in any way, shape, or form. The market, if you understand how the markets move, will offer environments where you can make significant profit over a period of time. But you have to allow for those environments to appear. And this can take time. And it's that element where people get frustrated. Now, the other point to note is that you need to keep an eye out on all the markets. Of course, in this webinar, I focus on foreign exchange, but I don't just trade foreign exchange. I trade stocks and I trade commodities, because there's a natural flow of money. Money moves from all the markets. So it'll be in foreign exchange for a while, then it leaves and it goes to stocks for a while, then it leaves and it goes to commodities for a while, and so on and so forth. Money moves from market to market. This is the natural flow of money that is controlled by the market makers. And so we need to know where the money is, and we then need to be trading in those markets. There is no point trading foreign exchange if the market makers are in stocks, and there's no point trading stocks if the market makers are in foreign exchange or commodities. So you have to know where the money is. How do you know where the money is? That comes down to having good software and a good understanding of price action. Okay, so let's do some analysis. Starting with the Aussie dollar, US dollar, is another round number. So we've had a move of 4,000 pips over the last 4 years. We can see that price is currently stuck in an area of consolidation. As the long-term trend is bearish, we would like to see a breakout to the downside. Of course, within this area of consolidation, you're going to have moves up, moves down, moves up, moves down, until it actually starts breaking out. We don't want to predict, excuse me, I'm just going to grab some water. Until price actually breaks out, either to the upside or the downside, we want to be standing aside. Our bias is always with the trend. Remember, the trend is your friend. And so that is what we want to be doing. And so our bias is with a breakout to the downside. We want to see price break through 0.7, break through the low of 2015, which is that pink line, and break through the low of January, That's that pivot here. If I just open the chart up, you can see that we do have the low here, but we've also got the low of this bar here, which is the low of January. So we need to see this support level, and this support level cleared, and then we can look to trade it towards 0.60. And that involves patience. Now, if you look at the weekly and the weekly always paints quite a clear picture of the overall trend. So we can see that price is trading below the 200. And if you look at the angle of the 200, it's angling down, telling us we are in a bearish, not only are we in a bearish bias, but we're very much in a long-term bearish trend. If you look at the 50, price is trading below the 50, but it's starting to straighten out. You can see that we've got a very nice angle to the 50, but then it starts sort of straightening out. It's heading towards that 3 o'clock angle. We want to see price. We want to see price in a trend, and we want to see that confirmed with the 50 moving average also in an angle heading down along with the 200. Looking at price action alone, we can see it's just going sideways. So it's not a tradable currency at the moment. If I open up the daily chart, we can see very clearly that price is now looking to push through that 200. So it's come back to retest it. Of course, remember the 200 acts as support and resistance. We want to see this closed by the end of today. We don't want to get too excited and start assuming we're in a bull market. We're not, because we have resistance right here. At the top of the range, we have resistance. So the price could come up to that level and come back down again. What we want to see is price clear out of resistance or clear support. If you look at the 50, look how flat it is. Now, moving averages are lagging indicators, so you don't want to base your decisions on moving averages. You want to base it on price. You use moving averages to confirm what price is telling us. Moving averages are confirming that price is in a range, and you can see that price is in a range simply because it's going sideways. So the Aussie dollar, US dollar is not something worth trading. Let's go to the US dollar, Canadian dollar. Now, the US dollar, Canadian dollar, again, if we look at the bigger picture, we can see very much in a bullish trend going back to 2011. However, in recent times, what have we seen? Well, we've seen a shooting star at 1.4 round number and the high of 2015. So we can see that's acting as resistance. So we've got a shooting star at resistance, and we are now seeing weakness to the downside. This is still not a trend reversal, because if you look previously, we had a pretty deep pullback here. We had a deep pullback here. We had a deep pullback here. So this is nothing more than what we've seen in the past. Remember, the past is a very good indication of what could happen in the future. However, looking at this setup right now, this is not something that I can start looking for opportunity above the 50 on the weekly and above the 200. And even though price is starting to pull back, the 50 moving average is still has a pretty good angle to it. It's starting to flatten out a little bit here. You can see that the daily is still heading, the 200 is still heading up. If we go move across to the daily, we're actually trading below the 50, but above the 200. So we don't have a clear trend direction on here. So this is not something that you want to be trading on a long-term perspective. Okay, of course, intraday traders and day traders will have a different approach, but I don't endorse day trading as approach to the market for private traders, because the logic behind day trading is really to get in and out of markets for quick traders don't make money. But to make significant money from day trading, you've got to have a very large account size. You've got to have the account size of a bank to make very small moves equate to large sums of money. A lot of private traders don't have that. So what they then do is risk a lot on small moves. And you may have winning trades, but then you have losing trades, winning trades, losing trades. So you go through all of that effort for very little reward. In addition to that, if you go on a losing streak, which is very possible, and you're risking large, that's how you then lead into blown trading accounts. And blowing trading accounts is not an essential part of trading. I have been trading since 2007, and I have never blown a trading account. So it's not something that needs to be done. The reason where people go wrong is that they're so focused on the results and they're not focused on the process. Focus on the process, get it right, understand market conditions, understand how to trade, understand what's happening on the bigger picture. Don't get bogged down on the lower time frames thinking that that's where the money's to be made. It isn't. And I mean, there is money to be made, but consistent growth, that's not going to happen on the lower time frames. And that's what you want from trading. You want consistent compounding growth so that by the time you're 70, 80, 90 years old, you have that Warren Buffett size account. That's not going to happen from day trading. Okay, let's move on. Let's look at the CAD Japanese yen. The Japanese yen currencies are on my watch list. We'll start with the CAD Japanese yen. You can see we had weakness to the downside, but price struggled to break through 80. It tried in January, it tried in February, but closed above it both times. And you can see now March, there's a reversal back to the upside. So we are trading below the low of last year. So price does have a bearish bias to it, but it's facing 80 support. So it's stuck between resistance and support. We really need to see price close below the low of January, and we then like to see movement down towards 70. On the weekly, below the 50, below the 200, and we can also see that the 50 is starting to look to cross over the 200. So also good extra confirmation that we could be in a bearish market. All right, of course, if price continues to head up, then this will start angling back up and it will start heading back up again. But it looks like the 50 is looking to cross below the 200. On the daily, the 50 is already below the 200, but we can see now that price is trading above the 50. So the 50 is acting as support on the daily and is acting as resistance on the weekly. If you look at what price is doing, it's very much in an area of consolidation. It's just going sideways. The 50 moving average is now starting to flatten out. You can see that. So there's not a lot of interest on this particular currency. We do need to see price start breaking out and trending, and ideally in a move to the downside. Okay, so the CAD Japanese yen, not one that's looking very interesting. However, if we look at the Euro Japanese yen, where is it gone? There you go. Okay, if you look at the Euro Japanese yen in comparison, okay, we had a big move to the downside. Price had closed below the low of 2015, suggesting a bearish bias to it. It's now come back to retest this level of, which was support, which is now resistance. After every break, they generally test to be a retest of that level, but it's also faced with 120 support. So what we need to see is 120 cleared. We want to go for the direction of the trend. We want to see 120 cleared. If 120 is cleared, then we could see it move towards 100, even this level here, which is around 94. So the logic is, and this is something that a lot of people don't really, aren't really aware of, or maybe don't fully appreciate, is that the distance between here and here is 120 pips. So the distance where price is now and where 120 is, the distance there is around 300 pips between here and here, approximately 300 pips. 300 pips is a significant amount for most people because they're so used to trading for 20 pips or 30 pips that 300 pips is a significant amount. For me, as a trend trader, 300 pips is not a significant amount. I'm happy to wait another 2,500 pips. Yeah, and you can see that there's a clear run to the downside. Okay, so the logic for me is to wait 300 pips for price to clear 120 and then target potentially 2,500 pips to the downside. And if you look at what's happened before, we can see that price moved through these levels very comfortably. So we'd like to see price move through these levels again in equally the same way. So by applying a bit of patience, we may just be rewarded very nicely. Okay, let's have a look at the euro pound. The euro pound is another currency I've seen a lot of people talk about on social media. Now, let's have a look at what the euro pound is doing. Since December, January, February, good move to the upside. Price created the high of 2015. You can see that price tried to break through it. There was a reversal, and we're now seeing weakness and downside. So you can see very clearly, if I just open up the chart, you can see very clearly how price reacts to these levels. There are significant levels of support and resistance. The long-term trend is bullish, and so our bias is still with the bulls. We want to go in that bullish direction. We want to see price clear the high. We want to see price clear this high, which is the pivot of February, and we want to see price clear 0.80. If it clears these three levels, we can then see movement to the upside. Okay, so definitely want to keep an eye out on, but again, we need to apply patience. Okay, let's move on. The pound. Okay, pound dollar. Again, we are seeing Now, if you actually have a look, we've had 4 months of weakness. 1, 2, 3, 4. 4 months of pretty solid weakness. We cannot really expect price to continually head in a particular direction. There are periods where price slows down, and there are breather periods or profit taking, whatever you want to call it. But there are periods where price goes against trend before a continuation. And we can see that on a regular basis. If we ignore that 2008 move to the downside, that was a pretty significant move in a very short period of time. But if you look at all the other trends, we can see that they aren't just solid green bars. We have red bars in between. So this is really telling us that we are, this is really highlighting rather the natural movement to price. So what we're seeing here is nothing unnatural. The reason why we're seeing a bounce to the upside is because price is faced with a support level here and another support level here. So we will see bounces of support levels, and there's another support level right here. Okay, so we are seeing price bounce off support and bounce off resistance within these sort of areas. So if price comes back up here, we may see a bounce to the downside. We've also got the round number 1.40. Price has come back to retest that. Either way, as a long-term trend trader, I'm waiting for this whole area to be cleared. Once it clears 1.35, then I will look to trade it to the downside. And you can see that there's very clear space. You know, or you always want to go in the direction of the trend and choose the path of least resistance. And this often requires patience. Okay, if we look at the weekly time frame, below the 200 and below the 50, so that's okay. Price is trading below both, below the 200, below the 50. So we have alignment on the weekly and the daily. It's just that the monthly doesn't look very good based on the fact that we have multiple support levels ahead. So even if the weekly and the daily are aligned, we still want to apply patience. And we can see that we are currently seeing a bounce to the upside and price coming to retest that 1.4 level. We've got a pivot support, now resistance level here. And you can see very clearly how price is now coming back to that level. Okay, again, patience. Until price clears 1.35, it's not a trade I'm looking to trade. Okay, let's move on. Another currency that's looking quite interesting is the pound Canadian dollar. Okay, if you look at the pound Canadian dollar, we had a significant move to the upside. Price came to 2.10. We had a double top formation, and we've now seen weakness to the downside. Double top was confirmed, and price has now moved towards this level of resistance, now support. It's now bounced off that, coming to retest 1.9, which is the round number. Either way, price is trading between these levels, 1.9 and this pivot of 2014. You can see price very clearly stuck in these levels. Okay, what we want to see is the long-term trend continue. So the trend is down. We want to see price clear this level and then move towards these pink lines and 1.8. Now, if you look at the distance between here and here, you're looking at about 700 pips. So that's a significant amount. I mean, you could potentially trade that between here and here. Ideally, you want to see price trading below the low, but sometimes you want to apply discretion. And if there is an environment where you can get in, then you can take that trade, but make sure you reduce your risk because you don't have all your factors. So if price was trading below the low, I would risk 2%. Between here and here, I would risk 0.25% or even 0.5% on my account. Okay, we're trading on the, looking at the weekly, we are below the 50, but above the 200. The distance between here and here is 1,000 pips. So potentially you may be able to get in at some point and start looking for weakness to the downside. Ideally, we want to see price below the weekly 200, but if you go against the weekly 200, reduce your risk. On the daily, trading below the daily 200, 50 is hooking down, looking to cross below the 200 moving average. Look at what we're seeing at the moment. Nothing more than a correction. If you look at the history, there was a correction here, bit of a correction here, a little bit messy around here, but that's because of the 200 moving average. What we want now are clean pullbacks, breakouts, clean pullback, breakout. Each time it breaks out, we can compound into the trend. We can add further positions. So again, patience is very much rewarded. Okay, so again, not something that I'm looking to trade just as yet. I do have short positions running. I have multiple short positions running. I would look to add further short positions as and when price clears this support level and it becomes resistance. Oh, sorry. I don't have. Please totally ignore me. I don't have any short positions on the pound Canadian dollar. I have short positions on the pound Japanese yen. I'm looking for short positions on the pound Canadian dollar. I do have short positions on the pound Japanese yen. So looking at the pound Japanese yen, price is trading below the low of last year, so 2015, and you can see good weakness to the downside. Nothing more than a correction. Price has come back to retest the 160 level. So this is just a correction. We want to see weakness to the downside and a continuation of the bear trend. That's what we want to see. On the daily, we are trading below the 200 and we're trading below the 50. In addition, the 50 is trading below the 200. So we've got price, then the 50, and then the 200. That's a very favorable setup. That's what we want to see. On the weekly, price is trading below the 50 and below the 200. So remember, the weekly is a much slower moving time frame. Ideally, we want to see price, the 50 moving average, cross below the 200 moving average. So we want to see this move down and cross below the 200 moving average. And that will happen as price continues to weaken. We don't necessarily need to wait for that because that may take weeks to happen. And in the meantime, price has continued going down and we've missed the trend. So as long as price is below both the 200 and the 50 acting as resistance on the weekly and the daily, then we have good alignment. If you're not in this, then a break and close below this support level will offer an entry point. So this is where we need to apply patience and let the market dictate. If price continues to the upside, then I'll have stop losses in play and I will get stopped out for a small amount of profit. This is not what I would consider a pretty significant trend. If you compare that to the euro dollar, if we go back to the euro dollar, and if I just move this back, that is a trend. You can see a very good trend to the downside. So the trend started in May 2014 and went all the way down to March 2015. That is the length of what I would call a trend. And this was a very profitable trend for me. Okay, so that is what we should be looking at. If you look at what it's currently doing, it's just going sideways. If you look at the 50 moving average, it's very much flat. Good weakness to the downside. So if this momentum continues, we want to see price clear this support level, this support level, this support level, this support level, and this support level. So there are multiple support levels along the way. And this is another reason why you don't want to be trading ranges. Ranges aren't very clean cut. It's not just simply move up, move down, move up, move down, move up, move down. That's not how it is. It's very, very choppy within ranges. And so that's another reason why you don't want to be trading ranges. You want to be trading clean trends. Okay, next currency we'll look at is the dollar yen. Okay, if you look at the dollar yen on the monthly time frame, if I just open it up, we can see that price came to major resistance, failed, and has now showing weakness to the downside. It is trading below the low of last year, so we do have a bearish bias, but we want to see that momentum continue to 100 and then further down all the way down to around 76. So there is good weakness potential and good profit to be made to the downside. If this continues up, then I would want to see price clear above this high. And that's when I will start looking for a long opportunity. If you look at the weekly, trading below the 50, but above the 200. If you look at the daily, trading below both the 50 and the 200. So not a currency that I would look to trade just as yet. And that's ultimately because price is trading. It is trading above the weekly. So, but it's not because of the weekly that I wouldn't trade it. It's because it's trading above 110, which is acting as support. 110 is a round number. If it clears 110, then you may potentially be able to get a short entry in to the next support, which will be the weekly 200. But we need to see 110 cleared before we can start shorting this. Okay, the final currency I'll look at is the Singapore dollar Japanese yen. Okay, if I start on the monthly time frame, we can see prices trading below the low. Now notice, look at all the yen currencies that we've looked at. We've looked at the CAD yen, Euro yen, pound yen, dollar yen, Singapore dollar yen. So a big focus today on the yen currencies. And that's because the yen currencies currently showing signs of where the money is. So if you look at this move to the downside, why are we seeing a bounce up? And the reason is because price is faced with the 80 round number acting as support. You can very clearly see that. Okay, round numbers are significant levels of support and resistance. You can see we've got 90 here. Price came around 90. They're not hard levels. Price came about around 90 and then failed to the downside. Okay, if you look at this level here, this whole level here, here and here, this is around 60. It's a round number. If you look at these peaks here, they are around 70, which is a round number. We have 80 around here, and price is currently bouncing up off 80. You can even see how price failed here at 80 and then came down. So you can see very clearly how round numbers act as support and resistance. If price clears this low, we can then look to trade it to the downside. If it clears the weekly 200 as well, then it will clear the 80 as well. Then that's when we can look for price to be, that's when price will confirm it's in a bearish bias and we want to start looking for shorting opportunities. So we need to see 80 cleared, the weekly 200 cleared, and this low here, the low of last week, we need to see that cleared. So one, two, three levels, and then weakness to the downside. It is trading below the 50, but it's the 200 acting as support is another reason why I wouldn't take the trade. And I'm looking for shorting opportunities. Trading below the 200, trading below the 50. We've had a correction, a pretty deep correction to the upside. But the market sentiment has not changed. We're still very much in an overall bearish bias based on the moving averages on the daily, the week on the daily chart with the 250 and with the 50 as well. But the 200 here is misbehaving. So we need to see price go through the 200 moving average on the weekly. Okay, so overall, the analysis for today, guys, is really you want to be standing aside. Jay, I've just done the pound Japanese yen there for you, so I hope you got that. That there, guys, is my analysis for today. Not much going on. Remember, we've got NFP out on Friday. Now, I know a lot of private traders will be looking to trade NFP because they are looking to make a quick buck. The smarter option really is to not to trade NFP because NFP is just, you're very welcome, Jay. NFP is just pure gambling. It's guesswork. It's not trading. So a lot of people lose a lot of money on NFP Friday. The only people that make consistent money on NFP are the brokers. So, and you'll also notice that the brokers increase their spreads around NFP. So they profit very handsomely around NFP. So the smarter option really, guys, is as private traders is to note that NFP is particularly volatile. It adds intraday noise. All of the moves that we're seeing at the moment, we're seeing quite significant moves against trend. That's because of the build up towards NFP. Thursday, Friday, NFP comes out. And then from next week onwards, markets settle down and the trend usually takes over again. So you're better off applying a little bit of patience and letting the market dictate to you and not get caught up in any of the intraday noise that's involved trading NFP. So yeah, the smarter option really is to stand aside. Okay, are there any final questions before I call time on today's webinar, guys? Okay, it doesn't seem like there's any questions. I hope people are listening. I hope people are taking notes and are on board with what I'm saying regarding trading the long-term trends. If there are that you trade SP. Can you explain to me what SP is? I'm not quite sure what you mean by SP, Solby. If you could just expand that, please. Okay, if you would like to email me, my email is zaheer@tdtpro.com. Okay, please follow me on zaheer@tdtpro.com. Guys, if you are not following me on Twitter, then please follow me on Twitter. There's two places that I would like you to follow me on Twitter. Let me just bring it up. Bear with me 1 second. Okay, I'm going to put two links into the chat box. If you can, are you talking about the S&P, the NASDAQ, and the Dow, right? So you're asking me about the indices, yeah? just clarification for that. Okay, guys, if you could follow me on at Zaheer Anwari on Twitter, and if you could also follow me on at Dynamic Trader. Okay, so I'm a senior member of the Dynamic Trader community. Now, I periscope on a daily basis. If you guys are not, if you aren't familiar with Periscope, well, Periscope is an app that's owned by Twitter, and it allows for live streaming. So I live stream every day around 4 p.m. GMT, and my and a colleague of mine from the Dynamic Trader community, Miguel, he periscopes at 2 p.m. GMT. So, you know, we cover both stocks and foreign exchange, commodities, and we talk about various elements of trading. So today I talked about why not to trade tops and bottoms, and why instead to trade the trend. A lot of the times people try and predict tops and bottoms. It's a very difficult way of trading. You really want to be trading the trend, the long-term trend. It's a far simpler approach. So you can watch it on replay. Periscope replays are up for I think 12 to 24 hours. I can't remember which. So if you haven't got Periscope, please download it. Please search for Dynamic Trader, and please follow us on Periscope. We do have, you can also watch them online. I'll just send you, I will just send you the link. The only problem with watching Periscope online is that you can't interact with the presenter. So if you have any questions that you want to ask, you can't do that through the online version. You can only do that through the Periscope app. So to use Periscope, you also need Twitter. So please download Twitter, open a Twitter account, and then download Periscope app and log into Periscope with your Twitter app. Okay. Solby, I don't trade the indices. I don't trade the Nasdaq, the Dow, or the S&P 500. I don't trade the indices because they're far too risky. Why would I would rather trade 500 stocks than the one index. So as opposed to trading the S&P 500 index, I would rather trade the 500 stocks that make up that particular index. I have more options. To me, it's far safer. I can look for better opportunities, and sometimes the S&P is going sideways, but there are stocks that are still going in, that are still in a trend. So you know, it's just far smarter to trade the individual stocks than get caught up in the index. Of course, if you don't know how to look for stocks, that's the problem. So a lot of the times people don't know how to look for good stocks, and so they then just trade the S&P index or the Dow index, because if you look at the S&P, that's 500 stocks. If you look at the Nasdaq, that's 100 stocks. You look at the Dow, that's 30 stocks. So that's 630 stocks alone. Then you've got the Russell index, you know, that's a further you know, X amount of stocks. So you're looking at hundreds and hundreds and hundreds of stocks, thousands of stocks. So how do you find the best stocks? And the answer to that, guys, is you need good software. I use MetaStock to scan the stock market for me, and I am then able to find the best opportunities. I don't rely on Yahoo Finance or the newspapers or, you know, any news terminals, Bloomberg, Thomson Reuters. I don't rely on anyone to tell me where the best stocks are. I can find the best stocks myself by having a scanner that will scan the stock market based on certain criteria that I look for, and it will give me the best stocks available to me. So if I just go back to the charts, you can see some of the stocks that I've traded in the past. For example, Marriott. You look at Marriott, that's that bull run, a big bull run to the upside. KR, this was a stock I traded last year, a very good run to the upside. Someone's mentioned Disney. No, actually not Disney. Someone mentioned Disney on my Periscope. They asked about Disney, and you can see when I traded Disney, but currently it's just going sideways. A short stock that I traded, it was Joy, and you can see movement to the downside. Another stock I've traded is Edward Life Sciences, EW. I keep on forgetting the name, EW. You can see a good move to the upside. Another one, Southwest Airlines, another good run. Remember, guys, this is the monthly chart. All of these charts I've just shown you are monthly chart. Delta Airlines, another good stock that I traded. So you can see that, you know, by having good software, you can actually find stocks, and you don't need to rely on anyone else to tell you where the stocks are. Okay, if you want to know more about the software, if you want to know more about the stocks watch list, our community members, the dynamic trader community members, they save about £10,000 a year with the stocks information that we give them. The scanner, Thomson, the MetaStock scanner, that costs me around £2,000 a year. So I'm paying £2,000 a year for my stock scanner. Because I have the scanner, my community members, the dynamic trader community members, they don't need to pay for the scanner. So I'm saving them £2,000 a year. In addition to that, I give them the scanned stocks watch list at no additional cost. So they are saving, hundreds of pounds a month, thousands of pounds a month, so that they don't need to go to a website to purchase stocks watch lists. Okay, so this is where trading comes in as a business. You need to understand the various elements of what makes a good trader, understanding price action, looking at long-term trends, but also the equipment. Having good software, eSignal. I'm using eSignal as my charting package, but I haven't shown you the proprietary tools that I have, the inbuilt scanner, the inbuilt money management system, the tools, the trailing stop losses, the entry points. There's a whole load of goodies that go into this software that we have. In addition to that, I have MetaStock that can scan the market. So, simply coming to free online webinars on a weekly basis is going to help you to understand what the markets are about, but it's not going to help you to become profitable in the sense of good long-term compounded growth. And that's what private traders are looking for. You need to step up to the next stage, and the next stage is to really invest into yourself, invest into trading as a business, because trading is a business. There's no business out there that thrives on free. Apps require investing. Businesses require investing. That's why we call them startups, because startup companies require startup costs. So you need to view trading in exactly the same way. You cannot get blinded to the fact that just having free software and going onto a free online platform is enough to turn yourself into a profitable trader. It isn't. Okay, you need to do more than that. Okay, so that are my pearls of wisdom for today. Hopefully you guys will take on the wisdom that I am partaking with you guys, and that you take it on board and you chew upon it and you register it. And in addition to that, you then decide to take action and do the live training that I am doing on Saturday from a long-term trend trading perspective. Here is the link, guys. I'm going to put that into the chat box for you guys as well. If you have any questions, I've already sent you the email, and I'm happy to answer any emails that you may have. Okay, guys, it's now 4:45. I'm going to call time on today's webinars. There's no more questions coming in. Hopefully, I haven't been talking to myself, but for all the guys that have said hello and asked a few of the questions, thank you very much. And if you want to come onto my own personal webinar, which will be on in an hour and 15 minutes, that's 6 p.m. GMT. The link to register, actually, let me see if I can bring it up. Bear with me 1 second. Just trying to find it. If I can't find it, then just go onto Twitter, and you will see the links that have been sent out. So on my Twitter link, there will be scopes. There will be links that you can register to my webinar. Actually, here it is, guys. I can bring it to you 1 second. Sorry about this. Yep. Okay, here we go. I found it right here. Okay, there we go. If you want to come on to my midweek market analysis, I do analysis every Wednesday at 6 p.m. GMT. So if you want to come on to that, and we'll be looking at not just foreign exchange, but we'll be looking at stocks as well. So it's a very useful webinar that you can then progress to from here. Okay, all, take care. Have a lovely morning, afternoon, evening, wherever you are in the world, and see you same time on. Bye-bye.